All right, 3.28 is done. I recorded 3.29 and then accidentally deleted it. So, yeah, let's do it again. So for 3.29, what we need is slightly different. In 3.28 and 3.27, I think the one before that was not 27. I think we did 3.28, and before that 3.26. We were working out this thing over here. Proceeds from issue of share capital and repurchase of shares. And those things help us to calculate the cash effects of financing activities. We are now not looking at the cash effects of financing activities, but the cash effects of operating activities. Now, the cash effects of operating activities, as we've seen before, is fairly involved. That is, there are quite a lot of things that go into it. First, we take our net profit before tax, we add back depreciation, we add back interest expense, and we end up with something called operating profit before changes in working capital. We then have to show our increase or decrease in inventories, our increase or decrease in debtors, our increase or decrease in creditors, and those things together are called our cash effects of changes in working capital. We take our operating profit before changes in working capital and we plus or minus, depending on whether it's a net increase or decrease, our cash effects of changes in working capital, and that gives us cash generated from operations. But that's not the end. That figure goes there, or rather I should say it goes there, right? Cash generated from operations. We then have to add back, we then have to minus interest expense, we have to minus tax paid, and what's the other thing? I think the other thing is dividends paid. Oops, not dividends paid. I could be incorrect about this one here. My brain's a bit foggy right now, but the fact is, as you can see, there's a fairly lengthy process to get the cash effects of operating activities. However, for the activity we're about to do, I think it's 3.29, there's only one thing we need to do, and that is get the operating profit before changes in working capital, which means we're going to take the net profit before tax, and we're going to add back in depreciation and interest on borrowed funds. So let's do that now. Where's the question paper? The question thing. Where did I put it? Here. All right, I'm just going to try and undo some of this here. All right. So it says required, calculate the cash generated by operating activities. That's not quite correct. Cash generated from operating activities, is this whole long one here that I just explained, that long ass process. We're not actually doing that. What we're actually doing is we are getting the operating profit before changes in working capital. And how do we do that? Well, it's net profit before tax, 150,000. Add back in depreciation, 80,000. See, there it is, 80,000 depreciation. And add back in the interest expense, which is there, 30,000. And that would give us 260,000. So let's see what that looks like in the correct format of the cash flow statement. Cash generated from operations, there's more to it than this, as we've spoken about. But to get the operating profit before changes in working capital, it's profit before tax, adjustment in respect of depreciation, so we're adding back depreciation, and interest paid, so we're adding back interest paid, and we end up with operating profit before changes in working capital of 260,000. All right. That 260,000 in the cash flow statement would go right here. This figure here. Operating profit before changes in working capital. Okay. So we're done with that one. The next one, in fact, you know what, let's just do the next one right now because they're very quick. 3.3, let's just go back to WhatsApp, 3.30. Let's copy this and put it here. It says, consider the following brief statement of comprehensive income of JK Limited. Sorry, I'm not sure if I told you last time, but the information that they provided us with was an income statement, also called the Statement of Comprehensive Income. And it says, again, calculate the cash generated from operating activities for the purpose of cash flow statement. And given this information, it's clear that all we need to show is the, what's it called? The operating profit before changes in working capital. So, again, it is net profit before tax. This one, A. Add back depreciation, there's B, so we're going to add B. And add back interest expense, C. Add back C. A plus B plus C. Net profit before tax, add back depreciation, add back interest expense. So that would be 700,000 plus 180,000 plus 100,000, so that would be 980,000. Now let's look at it in the correct format of the cash flow statement. Profit before tax, 700,000. Adjustment in respect of depreciation and interest paid, 180,000 and 100,000. And that gives us 980,000. Operating profit before changes in working capital. And again, that figure would be this one right here. This one plus or minus this one would give us this one, which we would write here. And once we have that, we also minus interest expense, we minus tax paid, we minus dividends paid, and we end up with the cash effects of operating activities. Cash effects of operating activities plus or minus the cash effects of investing activities plus or minus the cash effects of financing activities equals net change in cash and cash equivalents. See, cash flow statement's not, it isn't that hard. I mean, I don't want to say it's hard, it's more long than it is hard. And because there's all these different parts, it can get a bit confusing. But once you've grasped the parts, then it's quite easy. All right? Okay. Cool. Thank you, and see you tomorrow. Or see you right after this video if I show it to you in class tomorrow.